Bitcoin down 3.2%. S&P, Nasdaq, U-turning back to the downside as we get closer and closer to the Trump tariff deadlines. Market started off quite positively here, filling in the gap from yesterday, but then now suddenly down 3.2% here on Bitcoin. If we take a look at the traditional markets, they are leading the charge to the downside, doing the same thing, losing gains from earlier in the day, now down 1.8%. The day started off really positively, but losses have accelerated into the close based on a few things which we're gonna cover in this stream. Guys, do hit up the follow button as you join this live stream. If you're not with me on Kick, make sure you're following me on Kick, even if you're watching the highlights on YouTube afterwards. Now, volatility index, the VIX spikes again, right? Another spike on the VIX, climbing up here, 16% on the VIX, showing a lot of volatility in the market. Let's get into the main reason this is happening. Of course, we get closer and closer to the midnight deadline that Trump has set for the new tariff to be imposed on China. Remember, that's an extra 50% if Beijing does not withdraw the 35%. What's worrying markets in particular is this statement that China are going to fight to the end. Let's watch this and respond to the comments that are shared here.
Let's talk about what's going on with China, because they are now vowing a strong response to President Trump's latest threat to escalate tariffs. According to CNBC's translation, the country's Commerce Ministry calling that a, quote, mistake on top of a mistake. The ministry saying if the U.S. insists on its own way, China will fight to the end. Now, the comments coming after President Trump said he'd hit China with an additional 50% tariff if China doesn't cancel its retaliatory 34% tariffs on American products. Take a look at President Trump in the Oval Office yesterday talking all about it.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals.
That's your first. Now, on the subject of the talks, the president said there can be permanent tariffs and there can also be negotiations. We're going to talk a lot more about all of this, tariffs and everything else, at 7 a.m. Eastern Time with the man in the middle, the Treasury Secretary, Scott Bessent. He's going to join us right here on Squawk Box Live, so lots of questions for him this morning.
You know, yesterday we spoke with Peter Navarro, and his take was that this was not a negotiation. Right. We were going to see that within a matter of hours. You heard that the Treasury Secretary was going to be negotiating with Japan, at least, and we will hear from him where these things stand. But that's been the biggest confusion point on Wall Street is, are these real and permanent? Are they a negotiating tactic? And where do we get there? And depending on the day, depending on which administration official you're speaking to.
Morning, dear Spence. Thanks for joining the chat.
And the Lutnick camp on one side. I think there's the Bessent and maybe even Elon Musk camp on another, which is, say, negotiations, and the goal is to try to get the rates down to as low as possible. The camp that I think we all don't know about is exactly which one President Trump is in, because he's talked about this being a negotiation, and then he's also talked about them being permanent forever.
It's just a threat.
I actually talk about this, but I see it's in the, we actually have it's scripted, but then we'll talk after. But speaking of Scott Bessent, the Treasury Secretary, Politico is reporting that he flew down to Florida over the weekend to encourage President Trump to hone his message on negotiations.
Let's just pause this for a second. The bit I want to get into is this. China's Commerce Ministry said it resolutely opposes US President Donald Trump's threat of escalating tariffs and vowed to take countermeasures to safeguard its own rights and interests. This is the biggest response we've seen, guys. Remember in the stream yesterday, I said, guys, Europe will probably end up bending the knee, right? Certain countries, smaller countries, I mean, of course, Israel was the first to do it, bend the knee because of their military aid, right? There's very small countries that will bend the knee. That's fine. The issue here is some of the bigger boys, and particularly here with China, right? You're starting a war with China, the emerging new superpower. You've got US in its twilight of its superpower period. And this is a fight that they didn't need to fight when they're in, you know, crazy levels of debt. And you're seeing now that China are not backing down. They're not like, yes, sir, let us negotiate. Look at the words that are being said here. The comments came after Trump said he would impose additional 50% on Wednesday if Beijing does not withdraw the 34% they put last week, okay? The US threat to escalate tariffs on China is a mistake on top of a mistake, the statement said. China will never accept it if the US insists on its own way, China will fight to the end. These are the words that have shaken the markets right now, with China saying we mean business. This is not a joke. If you're trying to play a game or do some brinksmanship with us, you're playing with the wrong one, brother. That's what they're saying over there in China, okay? And this will, send some worries down the market. Of course, Trump is going to have to stay resolute and try to fight through it, but it's not going to be easy, okay? It's not going to be easy. Let's see what they had to say here.
But your next guest says that for China, tariffs, they do not matter. Joining us now, Derek Scissors, Asia economist at AEI, his team and his people just putting out a big piece that I'll post on social later about the tariffs and the bad math. We'll get to that in a second, Derek. But I want to ask you, they don't matter that much, because here's the bottom line. Outside of Tesla, Starbucks, and Nike, maybe a couple of Buicks and some chicken feet, China doesn't buy much from us.
Right.
This is the biggest misnomer. It's not about China having to buy from you. It's how the global world trade goes. What, do you think US consumers are going to be happy now having to just buy US products? Nope. You think costs will not go through the roof? Try building, these factories you're talking about building in the US. Build it. Build the products in the US, right? Build a Tesla's car from scratch in the US. Don't just assemble the pieces that you're getting from around the world. Actually build them from scratch. Build your semiconductors from scratch, and look how expensive your iPhone will be. You'll have a $10,000, $15,000 iPhone in your hands. If you're okay doing that, then go ahead, do that. It's not going to solve your problem. You have a consumerism problem. You have a spending problem. Right? You have a military spending problem in terms of your aid as well. Solve those things. Don't get other countries to pay your tab.
Chinese tariffs definitely don't matter in a macro sense to the American economy. None of us will notice, except people who are specifically tied to China. My point is a little stronger than that. I don't know that the tariff rate on China itself matters. It certainly doesn't matter if we go from, 50, 79, 129. The Chinese will transship goods through other countries. They will find the lowest tariff way into the U.S. They're better at that than everyone else. And so the tariff on China is actually the tariff that U.S. charges other countries.
Yeah, and it's interesting because I want to remind our audience, there are already sizable tariffs on China. Many were put on by President Trump in his first term. Many others were put on by former President Biden in his term. A 100% tariff on electric cars, made in China, for example. Solar panels. And
Since China already faces more than 60% in tariff rate, it doesn't really matter if it goes up by 50% or 500%, said Ji Shanju, senior economist at the Economist Intelligence Unit, saying Beijing is prepared for a full-on trade war with the US. China is on the defensive side, but basically the two sides are testing each other's limits. As risks of an intense US-China trade war rise, Beijing might resort to further retaliatory measures, such as stopping purchases of US agricultural goods, matching US tariffs, and further expansion of export controls on metals and minerals. Remember, earlier, towards the end of last week, we spoke about China banning some of the rare earth minerals. That's going to cause America problems as well. Beijing has already placed export curbs on key rare earth elements. We just spoke about that. Exports of dual-use items of a dozen U.S. entities. The People's Bank of China on Tuesday set the midpoint rate for onshore yuan at 7.2038, the weakest level since September 2003, according to data. The yuan is allowed to trade within a 2% band of this midpoint range. This is a clear shot across the bow of Washington. Shots are fired, guys. I mean, escalation, look at this. Escalation is probably the only short-term outcome, but negotiations will ultimately come as both sides feel the pinch of economic downturn. That's the thing, right? Eventually, these guys will sit down, but it's not going to be easy. We're going to have to go through pain, and this was unneeded. You could have just sat down in the first place. Just like every single war, after the casualties, they do sit down and have a ceasefire. But at what cost, right? At what cost are we doing this?
On track for its best days since the pandemic. Oof. And CVS also rising in the news, almost 6% higher. You're also seeing shares of Eli Lilly turning right now lower after rising on an upgrade from Goldman Sachs from buy to neutral. It's been really a hard few months for this name, but analysts writing that the stock's current price point presents an enticing entry point, especially as the firm continues to maintain a strong position, where else? In the obesity drug market. Shares are, flat to the positive right now. Scott?
All right, we'll follow him. Christina.
For macroeconomic data coming out of the U.S. and you see the data in China, I think you will see a tactical deal out of economic necessity between China and the U.S. And I think when you look at investors generally,
I think that's a given. It's not that the US and China won't strike a deal. They will. It's just at when, what's the cost between now and then? What kind of tensions does this cause? What does this do to the geopolitical landscape? It's just not needed right now. Like, what's the, why? There's just gonna be a lot of pain, which is not needed. Right, let's now jump on over. Let's mute that. Let's just head back into the charts and take a look at crypto. Sitting in extreme fear at 24. Let's refresh on the liquidations as well, because the last 4 hours will be pretty gnarly on liquidations. Let's take a look here. Yeah, last 4 hours, 123 million. That's a lot, guys. 123 million in the last 12 hours, close to $250 million wrecked in leverage. I mean, that's the only people who are winning. When you're getting wicking candles like this, top candles here and bottom candles, you're getting wrecked. It's just the market sucking out the liquidity, right? Don't be that guy or girl that's giving this liquidity to market makers. One day we're really positive. Next few hours we're falling. Then we're really positive. Then we're falling. Just chill. Just chill. If we're pulling back and we need to pull back, that's fine. Decide, are you going to buy the dip? Do you have conviction? If we fall down to 73, to 70 flat, to those kind of levels, are you going to buy the dip? We're clearly in a downtrend now. Let's respect the trend, right? Yes, we had an okay day yesterday. It was a crazy volatile day. Now we're back in the red. This market is being led by news. It's all news-led, okay? We need to understand that.
1.5%, all sectors in the red remain.
What's more remarkable about it being down 1.5% is that it was actually up almost 4% on the day here. And you get to this point here as to sort of what exactly is driving the moves up and down. We came into this morning and it looked like this was just purely just maybe some folks looking at valuations, maybe finding some opportunity to buy. Maybe it was a bit of a short squeeze. But then by the time we got to midday, I guess people realized there was no sustainability to it, and then you saw a lot of people start to bail out.
Well, Bank of America had a note out this morning that said that all of their clients, whether it's institutional, retail, or companies, were buying stocks yesterday, right? So if that's the case, then you don't go anywhere with that rally, and then you wind up selling. But the real impact came when we got the news out of the administration that we're going to see a cumulative total of 104% tariffs on China.
Yeah, and it's hard to keep up exactly what the actual final percentage is going to be. I thought it was 50%. Now it's 104%. But really, the key takeaway here is that it doesn't seem like China is coming to the negotiating table, at least not before tomorrow,
right.
which is when a lot of these tariffs kick in. And I think that's part of the concern. I think there was some hope, particularly once you saw the news on Vietnam a couple days ago, and then, of course, coming in overnight and having that news that Japan had finally lined up some sort of pathway to negotiation with the Trump administration. But again, you're talking about individual tariffs on dozens of nations, and right now, you know, probably the biggest one out there, at least the second biggest economy in the world, is basically saying, look, we're ready to fight.
Yep, and they're fighting in terms of currency market. Just take a look at what happened with the dollar and the offshore yuan hitting a record high, a really unbelievable move. The PBOC eased some yuan controls, signaling that confidence and the tolerance for currency depreciation. And you also had a group of state-linked funds also scooping up equity.
Just want to play you this, which Trump has shared on Truth Social as well. Let's share this with you guys. He's captioned it, we're managing a massive amount of requests for negotiations.
I think that right now we're managing a massive number of requests for negotiations. It's actually logistically quite challenging just to go through them. It's something that I've been spending a lot of the time this morning doing, because at NSC and NEC, what we have to do is prioritize the meetings for the president, and there are so many to go through that, you know, we're actually getting ready to present a plan for him.
Oh, that's cute.
And when, but yeah, he obviously prioritized.
That's really nice. He's got all these countries, these really big countries like Israel and Vanuatu and Vietnam sitting down begging him to make a deal. We saw what China said. We saw what the big boys said. Have you got a deal with Europe yet? Right? These are the ones that matter.
This is two of our closest allies and trading partners, Japan and Korea, and the word out of those conversations was really positive, and positive really for American workers, American farmers. There are a heck of a lot of concessions on the table. In the end, the president, of course, is going to be the one who decides whether the deal is good enough to change his mind about the tariffs.
Okay, so that was what Trump shared on Truth Social. So at least we got some insight into that. Let's take a listen into this.
A self-inflicted crisis from the White House, from the very hand of the president himself, which has caused this level of market upset, versus something over a period of time that just crops up and becomes an issue that the market gets concerned about. The unwind of the carry trade back in August, for example. Yeah, that felt pretty bad, and the market looked bad for a bit. Do you judge the two differently?
No, I think, COVID was unprecedented. We've never seen anything like that. The collapse of Lehman, it's not that it's unprecedented, but that it has the potential to change the global economy long term. I think that's what sets us apart from COVID, is this could change both the size of the global economic pie and who gets which slice, which is one reason I think it's tougher to call this than another crisis. You don't know how this whole process is going to play out. Because I wouldn't be so quick to judge the market and say, hey, the market's just overreacting. There is real change coming, and the market is trying to price in that real change.
But that's the great unknown. I mean, if they believe that they're trying to reset the global economy, and let's just take that at face value, and we say, okay, I buy that. You're going to have higher costs here in the U.S. to produce goods. You're going to have higher wages paid to the workers to produce those goods. You may not have the pricing power you once did. So therefore, your margins are never going to be what they once were. Thus, your earnings are going to be reset lower. Thus, the market multiple, I would assume, must have to be corrected lower, too.
And you know what? The White House may be okay with that, because from what I've heard in the last 5 to 7, it looks like the end game for the White House is not so much what equity markets will do, but what the slice of the pie is that the rest. I mean, let's face it, for 40 years, the slice of the overall pie that equity investors got larger and larger. And it created consequences. And I think in many ways, I'm not sure the White House cares.
Just going to cut away from that because I want to play you something that's quite important, a reminder for us holders, right? Because now's a tough time in the market. It's easy to panic, easy to get shaken out. Hopefully this reminder helps you.
The news people are melting down. The market's down. Well, over the last 2 years, it's still net up 80%.
Let's not forget that.
Did you hear any headlines going, "You're so rich, you can't breathe"? Nobody said that. That's the. You know, what if they were as enthusiastic about reporting prosperity as they were a temporary dip in the market? So here's the rule, boys and girls. The definition of investor is you are thinking long term. If you have a long-term mentality and the stock market goes down, those of us that have been investing in the market steadily for 30 or 40 years, not 30 or 40 minutes, we smile when it goes down.
That's the point.
And buy more. It's
on
sale. Not, I'm going to lose everything. Oh, God. Oh, jeez. Take a dadgum.
Chill, Dave. Chill.
Seriously. Do I know how much it's going to fall under the Trump tariff thing, whatever the flip you want to call this thing is he's doing right now? I can't tell. But aside from all that, doesn't matter. 100% chance that the American economy is not going to crumble over this. 100% chance. So 100% chance that a year from now we're going to be sitting here smiling, those of us that did not take out our money. The only person that gets hurt on a roller coaster are those that jump off in the middle. Keep your hands inside the ride at all times, boys and girls, and wait for the coaster to come to a stop. And you will be just fine.
Exactly. Good point. The only difference with that analogy is the stock market has no natural end or start point, right? So you need to be smart in when you start and end. Now, if you desperately need the cash and you really need to get out of the market, fine. That's understandable. You shouldn't be in that position in the first place. Right? You should only be investing what you're willing to lose. You should be smart in entering the market. If you need to kind of come out of some Bitcoin because of that reason, then you're stuck, right? You need to pay rent. You need to do whatever you need to do. Fine. But for the rest of us who are investing what we could afford to lose, surplus cash to our expenditure, and you're in spot, you're not in margin, you're not in leverage, this is a discount. Bitcoin continuing to fall here on the hourly chart. I mean, we're now notching down another 1.1% this hour, now falling to 76.2. By the end of the day, we may well be at some of the lows from yesterday, back down towards 74 levels, which could be quite painful. So that's one for us to watch here on Bitcoin. We could be getting cheaper. And again, is this a surprise? No. Particularly on my videos, I've been sharing that since 110 on Bitcoin that I expect to pull back to 74. So now that it happens, yes, it's painful. Yes, the tariff narrative is painful, but dips happen, guys. Bitcoin went to 64, then down to 29, then up to 69, then down to 15,500, then up to 110,000, now down to 76. Like Dave said, it's going to be okay. everything's gonna be okay for the person who doesn't panic sell, for the person who doesn't get shaken with a lack of conviction, right? And that's the point right now. If you're sitting there on a bag of altcoins and you're like, my Sonic is down so bad, patience. Why would you sell when everything is against you? You want to sell when the market is prosperous, when it's excited, when people are FOMOing in. I remind you of a couple of months ago here, where Sonic was as high as $1, not just shy, 99.9 cents it was, or something like that, on towards the end of February, 21st of February. You could have sold then, right, when everybody's FOMOing into it. Now's not the time to sell from a position of weakness. That's not what we do. If anything, you're doubling down. You're now at prices on Sonic from March. You're at prices from Feb of this year, right? You're getting it at the lows of this year's pricing versus chasing it at the highs. And there were some people who were chasing the highs and are selling at the lows. They're doing it all wrong. You don't want to be that guy.
The opacity that exists into what the strategy and the end game truly is. Professor, thank you as always. Appreciate your time.
Thank you.
In trade arrangements. It's too interconnected. And let's not forget that alongside the trade disruptions, we also are seeing significant disruptions in finance. The market may bounce back a little in some days, but the risk off that this level of uncertainty.
Just to weigh in here, guys, ETH is getting ridiculously cheap. I mean, look at ETH. I mean, 1466 on ETH right now. Another daily candlestick low. This is getting really painful. I mean, you're already talking about prices dating back to March of 2023. Insane. Again, as an investor, you got to have a belief. The market may be saying, you're stupid for buying ETH. You're stupid for buying this coin. That's fine. You got to have conviction that this is the second largest crypto. Is it something I want to buy? Do I want to take a little bit of a risk? Do I want to give a bit more of my portfolio to Ethereum? You're not going to make money from not taking calculated risk. You need to take risk, but it's got to be calculated. And when you look at things like this, where Ethereum is being, could be picked up at a price, let's just take that measured move. Let's have a look here. I mean, from the highs that Ethereum's been to, you're at a 70% discount from when this thing was close to $4,900. Guys, $4,900 in 2021. The market's had more adoption. There's more money in crypto. The entire space has grown. You've got a pro-crypto government. World Liberty Fire buying Ethereum, all sorts going on. You guys got to vote with your funds, right? You got to decide which of these projects are looking cheap, because these are getting painfully cheap right now. Let me just remind you of an exercise I like to do. Jump on over to CoinMarketCap and get yourself this column. If you don't have to get this column, click onto columns and add this one, percentage from all-time high. Just look at how cheap some of these projects are from all-time high. It's ridiculous. Bitcoin, 30% down from all-time high, right? That's $32,000 from all-time high. Ethereum is 70% from all-time highs. Insane. XRP, 53% down. You've only got 30% down on BNB. It's held up strong. Exchange token tends to. You've got 65% down on Solana. Tron down 48%, Dogecoin down 81%. If you're one of those that are always FOMO into Doge when the news cycle comes and hits Doge, why are you not picking that up now at 81% down? Cardano, still a top 10 project, only just 82% down, just 19 billion in market cap. 19 billion. This was close to 60, 70, 80 billion in market cap if my memory serves me correctly. Keep going down. Let's go into the next 10 in the list. You've got Chainlink. Have people suddenly stopped using Chainlink? No. Down 80% in price. Avalanche down 90% in price. This token is $130 from all-time highs. This sat at $146. You're now picking it up for $16. Guys, if you have conviction in tokens, and if you remember what it's like in a bull market when everybody's FOMOing in to get into exciting projects, you'll look at this and just wish you had more cash on the sidelines. That's how I feel. I always feel like I never have enough cash on these sidelines. Like, I'm desperate to throw the some cash I have at this. I just got to be patient. I got to ladder in my buys in case we crash further. So I'm not throwing all my cash in right now, even though it looks so juicy, just in case we get another few percent on Bitcoin and the wider market falls. But all coins are getting rather juicy here, guys. Particularly juicy. Sui down 63%. HBAR down 74%. I mean, Polkadot, insane. This was once a darling. trading at like $54, $55. Now 94% down on Polkadot, right? Sitting at $3.42. That's 94% down. Guys, you don't need me here walking you through this to show you the discounts. There's some serious discounts in the market. You guys just have to decide which ones do you have conviction in and which one are you going to jump into, right? It's clear. If you look at the altcoin season index, just here, just where my cursor is here, it's a Bitcoin season, right? When things rotate risk off, people rather be in Bitcoin relative to altcoins. Altcoins suffer more than Bitcoin. That's just normal. But when the cycle reverses and the greed comes back in, whether it takes 3 months, 6 months, 9 months, any of these purchases you buy now, I'm very, very confident you'll be looking at it. And of course, it's not financial advice. Do your own research at all times. I'm just going to be sitting at it and and you're going to be laughing. You're going to be laughing because this is as fearful as the market can get. Yes, there might be another 5, 6, 7% on the S&P and Bitcoin might fall a bit low under 70. I get it. But when you're looking at the 90% and 80% pullbacks that I'm sharing on some of these altcoins, there's not much lower some of these good altcoins can go, right? Virtual Alp says, what about when it comes to buying? Again, I think I just covered that off. I'm just laddering in my buys, being patient. Trying to nibble my way into the market. I want to do some buying in case we get that sharp recovery because, look, we can get a decision tomorrow and off we go to the moon, even though it's unlikely. But at the same time, if we fall, I want to make sure I got a little bit more cash on the sidelines just to keep taking those nibbles, keep adding to my positions, making sure I'm only holding quality so that I don't wake up and panic sell. I don't want any of these weird meme coins. I don't want any, coin that my friend told me about that I don't believe in. Only projects which I understand, I believe in, I've researched the team, I like the project, I like the tokenomics. Those are the ones I'm holding because those ones are the ones I do not worry about buying the dip on. Okay, so that's my methodology in this wild market. Why is there Rhino on our screen? Let's refresh here on CoinDesk and see what they got going on here. Bitcoin rally stalls, but sliding yuan could be a bullish catalyst. Bitcoin is down back to 77.5. White House confirmed 104% tariffs on China at midnight. Green shoots, according to some, the offshore Chinese yuan has weakened to 7.4 against the dollar. So this is the argument that, whenever the yuan weakens, it tends to be better for a flow into crypto. Bitcoin statistically does well. Let's see how that plays out. Of course, over the weekend, you had Michael Saylor over at MicroStrategy buying the dip as well. That was helping the markets a little bit. No doubt people will be buying, right? You will look back in 6 months' time or even 9 months' time and be like, oh, look, the Bitcoin, the government was buying here, or Tesla was buying here, or so-and-so company was buying here on the pullbacks. That's how it works, guys. You think they're going to be buying at 110? No, they're buying now. They'll buy even more if we crash much more. They're not going to buy at the most expensive price. Do you think these guys are stupid? Do you think BlackRock is stupid? Do you think JP Morgan is stupid? Do you think all of these big institutions and now governments with the US Bitcoin Strategic Reserve, El Salvador, do you think these guys are buying at the highs? No. They'll be buying much more into these pullbacks as they DCA their purchases. So there you have it, guys. An update on the market. Hopefully you enjoyed this market close live stream. A weird day, but a day which is symbolic of the last few days, which is crazy volatility. Let's just recap, right? Friday here, crazy day, down 5.8% on the S&P. This is the S&P, not an altcoin. Close to 6% down on Friday. Yesterday was a day of insanity where we went all the way to the top side, went all the way to the downside, but eventually the day was relatively flat, 0.1%. Today, insanity. We went all the way to the top side, now all the way to the downside, down 2.7%. At one point, we were up 4%. Insane market, completely news-led, completely politics-led, but again, it's affecting our investment, so it's important we stay up to date with it, and the week will not stop, guys. We will get CPI data. We'll also get the Fed officials speaking as well. So loads to come in the next few days, and I will be covering it off in live streams. If you're enjoying these live streams, please do make sure you support, you follow on Kick, you share with others as well, and that will help get the word around of these live streams. The more people that join us and engage with the community, the more fun I can make these live streams for you, because it's a bit difficult for me just to speak to a screen if you're not active in the chat. So I want you guys to really get this chat busy over the next kind of couple of days as we do more and more of these live streams. Thanks for watching, and I'll see you in the next one.